Alright guys, welcome back to Business Hub. If you have not subscribed to this channel yet, please kindly like and subscribe to this channel in order not to miss any of our videos, because we are doing a lot on this channel, especially for people that are aspiring to become investment bankers or chief financial officers in their organization. This channel is actually going to help you a lot, right? And this is just a one part of the what this channel is going to be covering. In our next series, we are going to be covering investment opportunities, how to invest your money and get a heavy amount of return, not Ponzi scheme, how to do an in-depth analysis actually before you start investing your money in any other thing. And if you want to grow professionally, especially if you're an accountant, like I say, CFO, prospective CFO and CFOs, you can actually subscribe to this channel, because the content we are going to be bringing out on this channel is something that people pay thousands of naira, thousands of dollars to just to acquire the knowledge, but we are just giving it for you. We are giving it to you just for free. All you need to do is just like, share and subscribe. That is the price you need to pay, right? And we'll give you everything you need. So this, like I said, this file won't be available as usual. If you need the file, just comment "I need the file" using the comment section, and I will tell you what to do in order for you to get the file, right? So having said that, in the previous section we are able to determine our operational cost, our operating cost. That is, we started from the what, selling general and admin expenses. We started from the salary, look at how to arrive at the salary, right? Then we also look at how to calculate our operational cost and the total operating cost. We also saw that how to calculate that. Then we summarize everything to arrive at this value, which is what we are going to be taking into our income statement, right? Then we also calculated our operating working capital. We saw how we did that. If you have not, please go back and watch it so that you catch up with us. Now in this section, what are we doing? We are trying to calculate what our determine or build our loan schedule. So the first thing we're going to do, we are going to now bring in the loan amount. So what is the loan amount? You just say equal to, then you go back to your input, and this is our loan amount. Just, yes, this is our loan amount. So what is the duration of the loan? Now the duration of the loan, which is the loan period, we also go to our input as you bring it in. The duration of the loan is 5 years. Then what is the interest rate on the loan? Right, the interest rate on the loan is 25%. What did I do here? I just did Control D, because the interest rate and the loan amount are in the same size, so I just did Control D instead of going back and forth. So what are we going to do here? We're just going to put it where apply our link style. So this is it. We apply our link style, then this will bring it back to what, to percentage. So let's say the interest rate is 25%. Now this is our loan schedule. This is what we have in our assumptions. So this, we are going to format this again. We're going to format this in our style. Now the beginning balance. How do we determine the beginning balance? Remember that the closing balance of the previous periods is the opening balance of the next period. So in this case, this is our beginning balance is going to be equal to what is going to be this, because is the base year. Now we have this. Now this is going to be, then to get our total, our ending balance, we're going to now say, okay, it's equal to summation of these two. When you get this, then you minus our you less our what, repayment, that's loan repayment. Do that, we have this. So you can go ahead and drag this in, right? And go ahead and drag this and fill it to the right. So we have this value. Now what is our new loan? That's the first question we are going to ask ourselves. What is our new loan? Our new loan is this amount. When you do that, you just click here, link it in. Now you can see, because I've already linked all these values and link all the formatting, that's why we have this filling. So the next thing we are going to do right now is to what, to calculate our our repayment. So what am I going to do? What we are going to do is to just say equal to PMT, right? We'll say PMT. What is the rate? What is the interest rate? This is the interest rate, comma. Then what is the period? What number of periods in a month, in a year? And what is the number of the tenure of the loan, right? Number of years we have this, which is 5 years. What then, comma? What is now the amount, the loan amount, which is now the present value? The present value. Normally, I would have said, let's say, okay, let's put this here first. Close it and just enter. You know why it's not give us? Because this, there's no value here. What I want to do is I want to say, okay, summation of everything we have here, summation of everything we have here, right? We have this value here. So when you do that, you get this. I'll just expand this a little bit. So this is the summation of the entire value. Now if you look at what we have here, we have this repayment in red, which means, of course, it's a repayment. It's supposed to be in red, right? But I don't want it to be in this format. I want to remove the, bracket. I don't want it to be a negative value. So all I need to do is just open it up again. Before I put the repayment formula, the payment formula, all I need to do is just say, put an absolute formula, absolute ABS, right? Then I'll come to the front and close the bracket. Then I have removed what I have removed the I have removed the I have removed it from negative number. I want it to be an absolute value, right? Because my formula here has already taken care of the negative sign, right? If you look at what we have here, we have already taken care of the negative sign. Otherwise, what we would have done is just sum everything up, right? Sum everything up. So when we do that, we come back here. Then we have our what? We have our interest expenses. How do we then calculate our interest expense? First of all, let me do something here. Just equal to, link this, put absolute referencing by locking the entire, locking both the row and the column, right? So we have this. So it's take reference from that place. So this sheet, apply a set formatting, then apply the percentage style, right? So this is what we have. So we're going to calculate our what? We are going to determine our interest expenses. Now, how do we do that? So we are going to now say, okay, our interest expense is going to be the average of our old loan, and so yeah, the average of our old loan and the new loan multiplied by the interest rate. That's what we're going to do here. So average expense is going to interest expense is going to be average. Interest expense is going to be average of our old loan multiplied by what? Multiplied by our interest rate. Then you close the bracket. This is it. Then you now click and drag. Very simple, right? Very, very simple. So you can see this is now our interest expense, and this is the value that will be going to what? Is the value that will be going into what? Is the value that will be going into is the value that will be going into our income statement, right? So the next thing is to bring this value to this place. So that it can actually give us our what? Ending balance. Right? This is the loan. When we remove the repayment for the year, we should have our ending balance. That is what is remaining on the loan. So now our repayment is going to be equals to minimum of this. Now, because this value is standing on its own, we are going to now lock it so that we take reference directly from there. When you do that, now say minus what? Then minus our what? Minus our interest expenses and what? And if there is any other loan, if there's any other outstanding balance, right? If there's any previous balance, they will not take that into consideration again. Then you close the bracket and you enter. So you can see as we did that, this is what we have, and this is what we have as our ending balance. So you can just click here and fill it into the right. So this is what we have. You can just click here, select the whole of this and fill it to the right. So this is what we have. You can see that at the end of 4 years, this interest we are able to repay the whole of this loan. So that means this amount that we collected at the end of 4 years, we are able to pay it off. Even though the loan period is 5 years, but at the end of 4 years, we were able to repay the whole of the loan and we have zero balance here, right? So that is what we have on the part of the loan. So you can see that we are done with our loan schedule. This is just a simple way on how to develop or build a loan schedule, right? So the next thing we are going to look at is how to build what? To look at how to build our equity schedule. So we're going to do that right in this section. So first of all, let me format this and give it what heading one, because it's supposed to go here, right? So I'll format this and give it our total style. Now the same thing we did here, the same thing we did on the loan, we are still going to do the same here. So what we're going to do, our opening balance is going to be equals to the previous balance, and the summation is going to be equal to, okay, yeah, it's going to be summation of this. Let me go ahead and fill this in, right? Go ahead and fill this in. Now, first of all, we are going to bring in our equity, right? Equal to, go back to your input. This is our equity value. Just enter. Then our dividend payout ratio, which is how many percent do we want to pay our debtors. So our dividend payout ratio is 30%. What you're going to do is just come back here and say what? Equal to, come back and just put 30%. That means we're going to be paying our investors or our shareholders 30% of whatever profit that is made during the year, right? So we're going to do that. So here now you're just going to say equal to, this is your equity. Just link it in. You can see how this feeling. So this we are going to apply our link style. Then this is percentage. We're going to apply our percentage to that. So we have this, right? We have that. So that is that on the side of the equity schedule. Now the next thing we are going to look at is how to build on side of the equity schedule, but we are going to now see how to calculate our retained earnings. So retained earnings is part of the equity, but it's calculated separately. We are going to build a schedule for that, right? So let's go ahead and say our retained earnings. Now, what is the dividend payout ratio? Now, the dividend payout ratio is the same thing we are saying here. We again put absolute reference in, and we are going to link this to the entire sheet here. I'm going to say apply this. Then of course we need to start with the link, then we apply the percentage. Now this is our dividend payout ratio. Then we now also format this to our style. If you don't know how we are getting this or how we get to this point and why we are doing it so fast, because we have already laid the foundation earlier on. We did that in our model style guide, where we developed the entire model style, right? So this opening balance is going to be equals to the previous period. Now we have the net profit, which is going to come from where? The net profit is going to come from our income statement, which is not yet ready. So I will just put something here to mark it. Now on the side of the dividend payout, now we want to say, okay, if we make profit, then we should be able to pay our dividend. But if there is no profit, that means there is nothing to share, right? So if there is no profit, there is nothing to share. How are we going to calculate that? Now how are we going to calculate it? You can say equals to, open bracket, if this greater than 0, because we are trying to say if it is greater than 0, right? If it is greater than 0, then multiply it again, multiply this by what? By the percentage, by 30%. Then you close the bracket. You can see that it's giving us nothing because there is no value here. But if we have, let's say we have value here now, can see if we have value here, it will calculate that. And if you fill this in across, it will calculate that, it will give us the value. Let's say we have this value here. Okay, yeah, let me sum this first. This is going to be equal to summation of these two, close bracket, minus this, right? Minus this is going to give us this balance. So if, let's take for instance, let me remove this, fill this in. So this is what we have, this is the format we have. Let's say this value now, let's say here we have 500,000, 5 million, right? You can see this is the dividend payout, and this is the dividend the company will pay shareholder. Now if in the second year also they have, let's say, 8 million, and see this is also the dividend they are going to pay out, because they are paying 30% of this. You can see everything is taking reference from there. But if there's nothing, there's nothing to pay. If there's nothing, if they did not make any profit, there's nothing to pay. So that is just that on our retained earnings, right? That's that on our retained earnings. So when we come back in the next section, we are going to see how to calculate our, how to build our depreciation schedule, right? We're going to see how to determine or calculate our depreciation schedule, arrange our depreciation schedule, right? So this is just how we did this. Now if you look at it, we started with what? We started with building the fund schedule, which we started with the loan schedule, we entered the equity schedule, and finally we are on the what? On the retained earnings schedule. Then we see how, why we see the reason why there is no value here, because there is no profit to be shared. That is why we don't have any value. But once we start building our model, our integrating all these items, all this our calculation into our financial statement, then we can see how this all these items fit into place, right? So with this we can see that our model is coming into place. And the last schedule we are going to be building, our final schedule, is going to be the depreciation schedule, which is after that we can start integrating every other thing together, right? So if you have not subscribed at this point, again, this is the right time for you to subscribe. I cannot continue overemphasizing the need to do that, especially if you're a finance professional. Please kindly like and subscribe to this channel, so that you won't be missing out of the content we are going to be dishing. This is just one part of the things this channel is intended to do, right? This is just one part of it, to grow professionals in the finance industry, right? If you're an accountant, we are coming into your place, especially if you're a fresh graduate from the university. This YouTube channel is all the experience you need to get, or all the experience you need as an accountant, especially if you are a fresh graduate just coming out of the university. You say, do you have any work experience? With the knowledge you're going to be gaining from this channel, you can boldly say, yes, I have so years of experience, and nobody will know that you're actually learning it from YouTube. So kindly please like and subscribe. Don't forget also to share. Don't forget also to share. And if you need the file for your practice purposes, kindly comment on the comment section telling me that, hey, I need this file. Then I will now direct you on how to get the file. So thank you very much, and see you in the next section.